Why is XRP mispriced in the market? Has to rank among the best XRP articles I've ever read. Are you prepared to get right in and have a blast? Now let's get started. Because it does not know what it is valuing, the market keeps mispricing XRP. It notices a token. The system underlying is invisible to it. The market has been using inaccurate metrics to measure XRP for years. Analysts seek for news, traders seek out volatility, but neither group looks at infrastructure. XRP isn't a vehicle for entertainment. It is a financial tool made to transfer value throughout the global ecosystem with accuracy, finality, and neutrality. Because the function itself has not been valued in the world, the price does not yet correspond to its function. Infrastructure is not valued by the market. Early on, infrastructure has always been misinterpreted. While chasing apparent growth, investors ignore the underlying structures that enable such expansion. The early internet was characterized by the same dynamic. While speculative capital poured into dot-com names that created nothing of substance, the companies that built routers, networks, and data centers traded flat. The money returned to the builders only after the infrastructure became essential. Today, XRP remains in that same position. It is the plumbing of the financial future. When the market sees a quiet chart, it believes it is irrelevant. In reality, it is seeing the gradual development of an imperceptible network that will eventually support global liquidity. The actual purpose of XRP is rarely known. XRP was not intended to compete with other assets for speculation. It was designed to act as a link between disparate financial networks. It makes it possible for liquidity to flow freely across tokenized value, payment networks, and currencies. Deep technical integration, legislative clarity, and institutional adoption are necessary for that goal. These are sluggish processes that take years to complete, not weeks. What the market does not understand, it cannot price. Even while XRP's entire architecture is monetary rather than promotional, it nonetheless makes comparisons to speculative assets that rely on narrative cycles. When utility takes precedence, the bigger discovery becomes the longer that misunderstanding lasts. Unlike emotion, liquidity utility does not exchange. Market emotion moves in a different way than utility adoption. Infrastructure for liquidity builds up subtly until it reaches a point at which it becomes essential for the system. At that moment, supply can no longer keep up with demand. This improved utility value is thus quickly reflected in price adjustments. Since this is the antithesis of what drives retail markets, most traders have never witnessed it occur. Real adoption is quiet, gradual, and irrevocable. That was hot, I must say. That liquidity remains when financial institutions use distributed technologies to settle real volume. With time, it gets deeper. The stability of XRP is not a drawback. The phase it is in is reflected in it. The supply argument fails to capture the essence. The entire supply of XRP is a common source of criticism. And it doesn't if that's all that defines its actual potential. The effective circulation supply in relation to utility demand is what counts. Much of XRP is still in long-term custody or locked in escrow. The headline figures are much higher than the real amount of liquid float available for worldwide settlement. Velocity rises and available liquidity contracts as transaction volume scales. The actual price discovery that results from this compression of float against increasing demand is not speculation. Its mechanics, the foundation for utility, is established by regulation. In conventional finance, markets often price in regulation before it is implemented. Regulation of digital assets is often considered an afterthought, but the legal settlement of XRP status has greatly clarified the situation. It turns the asset from a risk to the law into a bridge mechanism that banks and other organizations can employ. That change has not yet been reflected in the market. Instead of being a recognized financial rail, XRP is still traded as though it were a fringe instrument. One of the most obvious symmetries in the current digital asset landscape is represented by that disconnect. The upcoming tokenized value wave. The world is on the verge of a revolutionary financial system in which ledgers represent real-world assets. Digital currency, commodities, bonds, and treasuries will all be tokenized and traded. Without a neutral bridge asset that can settle across networks, those systems cannot work together. XRP was specifically designed to serve this purpose. Bridge liquidity is emerging as the new oil of global banking as tokenized volumes grow. With each asset that travels throughout the chain, the need for a neutral settlement medium increases. It is a structural demand, and it is currently driven by necessity rather than conjecture. By its very nature, an institutional integration is quiet. Rarely does true adoption make an announcement. Reliability is given precedence over visibility in the regulated environment in which Ripple and its partners operate. Liquidity partners, enterprise solutions, and pilot corridors are created in private, tested covertly, and scaled only after perfect operation. Public enthusiasm is what retail marketplaces seek. Institutions seek clarity. Prices won't reflect the foundation being set today until the infrastructure is essential to operations. The market will realize that years of silence were really years of building when it happens. Perception is determined by perspective. The capacity to look beyond the immediate future distinguishes investors from speculators. Only when compared to other digital assets does XRP's present market capitalization appear substantial. It is negligible in comparison to estimates of tokenized assets, foreign exchange movements, and worldwide settlement volumes. Because the market still sees XRP as a trade rather than a change, there is mispricing. It treats it more like a coin than a piece of monetary infrastructure that is meant to help trillions of dollars move around the world. The valuation models undergo a full transformation when the focus is shifted from price charts to liquidity mechanisms. Because the market still views XRP as an event rather than a system, it is mispriced. The fact that value in financial architecture happens gradually rather than all at once has not yet been recognized. XRP won't require promotion or defense once settlement across distributed systems is the standard rather than the exception. Its usefulness will be self-evident. The market won't be finding a new asset at that time. It will be identifying the one that has always existed and subtly laying the groundwork for the upcoming financial transfer error. Value transfer. Whoa, my neck's hairs on the back. Yeah, when I read this, I got up. That was really broken down. Wow, I thought that was fantastic. Guys, please leave a comment below if you enjoyed that. What were your thoughts on this? I read a great deal about XRP. This was excellent. Okay, additionally, I wanted to draw attention to a couple points here. As I was going through that, if you were distracted by something else while you were listening, Bayberry Capital discusses how the market fails to account for the true worth of infrastructure, and how XRPs work as a bridging asset rather than just a speculative one as compared to early limitless infrastructure. Slow but important drivers include institutional uptake and legal clarification. Retail-driven hype differs from utility-based pricing discovery. The significance of liquid float as opposed to headline supply in the supply argument. XRP is being converted from a risky bridge to a compliant one by regulatory resolution. For tokenized assets, tokenization wave XRP serves as a worldwide settlement bridge, silent institutional integration, and the reasons behind the lack of adoption perception. Only when compared to other cryptocurrencies is the current market capitalization viewed as large, not the worldwide settlement flows. What else might we be lacking in this situation? The historical background of the XRP mispricing. A thorough timeline. As well as instances of significant mispricing cycles and events, significant obstacles to reevaluation, particular outside factors, price suppression, exchange practices, court cases, market narratives, intricate tokenomics and escrow mechanisms, an analysis of the impact of escrow releases on chain velocity, and the relationship between price and liquidity in Ripple's own custodial holdings. Successful integrations and case studies are also covered. XRP is being used by nations, banks, and businesses. Competitive environment and direct comparison with other protocols for bridge assets, such as Stellar, Quant, etc., risk and lingering difficulties. Sincere evaluation of reputational and regulatory concerns in technology, market manipulation, on and off ramps, and exchange assistance does discuss the differences between institutional engagement and the impact of retail. Simply put, I'm happy to be traveling with you. Okay, I will see you again soon.